Okay, hello there. My name is Vieriawan. I am from Institute Teknologi Bandung, Indonesia, and I will be presenting my research on the impact of Russia-Ukraine war-related events to the Indonesian capital market. Okay, so first I want to state the importance of this research. So, as we have known, the capital market holds an important role in the economy of a nation. So, understanding it better, meaning that we can increase the chance of performing better in the economy. And also, the second reason being the major events of the last year, being the Russia-Ukraine war, that has inflicted a global impact in the economy. One of them being the European market that has proven to be negatively impacted by the war. Okay, the last reason is to understand the Indonesian capital market better, because there has yet to be a specific topic that research the impact of the Russia-Ukraine war on the Indonesian capital market. So we need to understand whether or not the Russia-Ukraine war has an impact on the Indonesian market, and to educate the investors, specifically in the investors who are interested in the Indonesian capital market, to be better in the to perform better in their investment. Okay, so this research has three aims. The first is to identify the Indonesian capital market's efficiency level. It is based on the Eugene Fama's efficient market hypothesis. And the second is to figure out how much the impact of the Russia-Ukraine war-related events in the Indonesian capital market using the abnormal returns. And the third is to determine the significance of the impact the Russia-Ukraine war-related events have on the Indonesian capital market. Okay, so jumping in directly to this theory, the first is the efficient market hypothesis by Eugene Fama. It is a theory that states that there is a correlation between the stock price and the flow of information. And in this theory, there are three level of efficient market. The first is the weak form efficient market. That stated that the current price of a stock has reflected the historical price of of the stock. So therefore, analysis based on the past is not effective. The second is the semi-strong form that stated that the current market price has reflects all publicly available information. And the third is the strong form that states that the market price reflects all information, both public and private. And then the three-factor model, which will be used for the expected return. It is an asset pricing model developed by Eugene Fama and Kenneth French to improve the previously popular pricing model, the capital asset pricing model, by adding two other risk factors, the size and value. So there are three components in the three-factor model. The first is the market risk premium, the risk factor, that assumes that with bigger risk, an asset should come with a bigger rate of return. And the second is the size factor that assumes companies with lower market capitalization will outperform the company with bigger market capitalization. And third is the high minus low, or the value factor. The value factor assumes that the companies with high book to market ratio, also known as the value stocks, will outperform those with low book to market ratio, also known as the growth stocks. And this research will be done using this conceptual framework. So first, we will be researching the capital market using the efficient market hypothesis. First, we have to perform a weak form efficiency to at least check whether or not the Indonesian market has fallen into the weak form efficiency. If the weak form efficiency is fulfilled, we can move to the semi-strong form efficiency. And if the semi-strong form efficiency is fulfilled, we should move to the strong form efficiency. However, the research will stop at the semi-strong form efficiency. Moving on, these are the research hypotheses. So first, for the random walk test, the null hypothesis will be the data does not have a unit root test. Therefore, the index follows a random walk test. And the new hypothesis will be data has a unit root test. Therefore, the index does not follow a random walk test. The condition to determine which hypothesis will be accepted is if the probability of p-value is higher or lower than the lower of tolerance, or the level of tolerance, or alpha. And moving on, for the event study test, the null hypothesis will be there is no significant difference in the abnormal returns, and the new hypothesis will be there is significant difference in the abnormal returns. And the condition to determine is if the probability of p-value is higher or lower than the level of tolerance or the alpha. Okay, so these are the data that will be used for the research. So for the estimation period, we will use the 250 days estimation period or a year, and for the event windows, we will use a max of 20 days. But we will also use other event windows to compare between the event windows such as 20, 10, 5, and 1 event windows. And these are the details. And on the screen are the details of the dates when the data is extracted. And also we will be researching 3 particular index. The first is the IDX Energy or the Indonesian Energy Sector, JKSE or the Jakarta Sectoral Stock Exchange, the Indonesian Composite Index, and the IDX Trans, which is the Indonesian Transportation and Logistics sector. Okay, so for the weak form efficiency, we will be performing the random walk test using 2 tests: augmented Dickey-Fuller test and the Philip-Perron test. The formula can be seen on the screen. Okay, and for the event study, we will be using the standard Bowles and Brown's event study method, which we will be researching on the abnormal return, and also we will further analyze it using the cumulative average abnormal return. Afterwards, we will be performing the hypothesis testing using a 2-pair t-test. The t-test will be comparing the abnormal return. Will be comparing whether or not there is significant difference between abnormal return and the actual market return. Okay, we can directly jump into the random walk test result. So this table shows the test result for augmented Dickey-Fuller test and also the Phillips-Perron test. And according to the table above, the indexes that we have, for this research, particularly the IDX Energy, IDX Trans, and Jakarta Stock Exchange, have shown a p-value higher than the level of confidence up to 10%. Therefore, we can accept the null hypothesis and reject the new hypothesis, concluding that all of the indexes do not have a unit root. And we can move to the event study. The event study result, it will be split for each event. So first we have the announcement of war. This table shows cumulative average abnormal return during the event windows and also the significance level of the abnormal returns. According to the table above, the only one who shows significance is the IDX Trans in the 1-day event windows. It shows significance level in the level of 10%. And moving on, for the second event, when Russia cut gas to European Union in half, IDX Trans also shows significance in the level of 1% in the 5-day event window. Other than that, there is no significance. During the third event, the Russia cut to European Union in full. IDX Trans also shows significance at the level of 5% during the 5-day event window and 1% significance level in the 10-day and 20-day event windows. Last but not least is the last event, the Crimea beach destruction. The table shows that IDX Trans once again shows significance level at 5% during the 5-day event windows, and the Jakarta Stock Exchange also shows significance in the 1-day and 5-day event windows at significant levels of 5% and 10% subsequently. Okay, this part will contain the discussions for the previously analysis. So first, for the IDX Energy, the first part is it does not show any significance all around the 4 events and in all the event windows. So we can conclude that it is not a semi-strong efficient market. And comparing it also to the previous research, the finding of this research actually contradicts the research done by Sal, Fairuzabadi, and Listiorini that stated the energy sector of Indonesia being impacted by the war. And also, the findings of the research also proven to be an exclusion of Martin Nellinger and Sebastian Utz, finding that the global market has responded to the war. This is possibly caused by how the IDX energy sector is constructed, which in Indonesia it includes an energy supporting sub-industry amounting to 30 out of 66 companies. And the author find out that the performance of these companies are not directly correlated to the energy commodity price. Next is the IDX Trans, or the transportation sector. It shows the most amount of significance around the 4 events, and we can conclude that it shows sign of being a semi-strong, efficient market. We cannot be sure that whether or not it is a semi-strong, efficient market, because the result does not shows all holistically that the IDX Trans is significant. And the second one is the IDX has proven to be affected by the publication of local media, shown by the significance of the previous result. The local media highlights that the increase in price of energy commodities will have a negative impact for the sector. And last but not least is that the abnormal returns for IDX trends are majorly negative. Therefore, we can conclude that the IDX trends perform below the expected return. And last is the Jakarta Stock Exchange. The Jakarta Stock Exchange shows signs of significance during the Crimea Bridge destructions. It is the only one that, out of the 4 events that Jakarta Stock Exchange shows significance. And the abnormal returns for the Jakarta is more or less balanced, so it does not have a tendency, or we can say that it is neutral. And even though Jakarta Stock Exchange shows an extreme movements around the year, we can see from the chart below. The only part where it shows significance is during this Crimea Bridge destruction, which is around the end of the figure, where the red circle is. Okay, so in conclusion, the Indonesian capital market is not stationary, and it does not contain unit truth. Therefore, we can conclude that it is at least a weak form efficient market. And all of the indexes, IDX Energy, IDX Trends, and JKSE, show abnormal returns. So although it is insignificant, it may be insignificant, the market shows response to the war-related events. And specifically for IDX Trends and Jakarta Stock Exchange, it shows signs of being a semi-strong efficient market. On the other hand, the IDX Energy stops at being weak form efficient market. Okay, this is the recommendations for investors and for future research. For the investors, because the Indonesian capital market has fulfilled the random walk test, the investors should be aware that the technical analysis will not be able to perform effectively, because the historical information regarding the stocks has been reflected in the price, in the current market price. And also, specifically for IDX trends, after showing the most amount of significance, meaning that it shows the most probability to be a semi-strong efficient market, investors who are interested in the transportation sector need to stay alert to the public information. And for the future research, the first is to perform a better to choose a better method for the expected return, to increase the accuracy of the expected return. Maybe they can use 5-factor model or other expected return pricing model. And then for the second one is to increase the research scope by including other sectors as well. It is to get a better holistic view of the Indonesian capital market. And the last is to include other variables such as trading volume activities to measure the market returns and reactions. I think that's it for my presentation. Thank you so much for your attention. See you.